We have invited my former partner at NOAH, Yoram Wijngaarde. After 10 years, I'm still not able to pronounce your surname. Some things never change. We have David Blumberg, who is so kind and hosted us in San Francisco at his home for the first and only NOAH conference in San Francisco, and was not related to you. You are one of the great VCs out of Silicon Valley. And then we have a company from Israel, which, yeah, I'm quite excited about, because we always say that in Israel you have technology, but crowdfunding is an execution story. And I think John with OurCrowd built a wonderful business. And we are here to discuss crowdfunding in general. And before we do that, since you all have a bit different models, David is kind of he's like a little of the extra guy here, which we invited.
Third wheel.
Which we invited to give us his perspective, obviously competing with crowdfunding in a way, depending on the scale. Maybe some of your companies can use it, but you're a little bit separate, so you have to wait. Let's start with Yoram. Maybe you can tell the crowd here the origins of Dealroom.
Yeah.
And why you have decided to leave me. And most importantly, if it was a good decision to leave me.
Okay, well, I think that remains to be seen. But I think after 10 years in banking, doing things the traditional way, I got a little bit fed up doing deal after deal, and I would really wanted to.
So you needed a change. What's the topic of the conference?
Yeah, I needed a personal change, and I wanted to really build a product, something that kind of accumulates and gets better and better and better every year. And I wanted to use my experience as an investment banker, so that's why I created Dealroom, and it came kind of was created out of NOAH, of course. So it gave it.
I think it was called NOAH Insider one day, right?
Yeah, it was called first NOAH Insider, which was kind of like a startup directory.
And we got this year at least 20 emails like, hey, why can't I message the attendees anymore? What's going on with NOAH Insider?
Yeah, so maybe we can do something about that next year. Actually, I'm meeting Bizabo afterwards. So.
Bizabo, okay.
Yeah. So anyway, what's Dealroom? Dealroom is built really for entrepreneurs, and we give entrepreneurs direct and secure and private access to any venture capital fund in the world, the most sophisticated investors, also some private individuals, and we give them the tools to do capital raising by themselves with little help from us, but any help that they need, we provide.
So people go to your platform, to Dealroom, to get funded, and you initiate the contact, but you don't follow through on it at the end, or will they send you a notification, Yoram, wonderful, Dealroom delivered me €7 million of venture capital?
That has happened. In fact, the other day we got a phone call from someone who said, we just closed the deal, and we want to send you a check.
Oh yeah?
But yeah, so that was a really nice Friday.
And they sent you a check?
Yeah, but
can I ask how big the check was? Maybe I should be jealous.
No, you will not be jealous for sure. It was a small check, but still,
no, but it's great.
It's fantastic. But we were backstage exactly talking about this. I mean, we haven't really closed the loop yet. You cannot transact online on our site.
So yours is more like lead gen, and it's a bit like real estate classifieds, as we heard earlier. You deliver the leads to the companies, and then they have to close.
In a way, yes, except that we do want to close the loop in the future, and our revenue model is not a listing fee like you have in real estate. It is a success fee still. So we rely actually on having a good relationship with the entrepreneur, that if we're the ones who got them capital, that they will give us a commission.
So you rely on them being honest, integer people.
Yeah, exactly. That's what we tell our clients. Like if we rely.
And what is the percentage they pay you?
Between 1% and 2%. And it depends on how involved we need to be. And it is possible also to pick 0%. It's just that we don't do any work then, but they can use our platform to share.
To get liquidity.
And to share data, yeah.
Want liquidity. And can you say what the biggest deal was you have done through the platform?
Yeah, the biggest deal that I have done through the platform was a 10 million fundraising.
10 million
Yeah.
pounds or euros or dollars?
Euros.
Euros, wow,
Yeah.
okay. So John, you're based in Israel, and I think your platform has a different aspect to Yoram's. You have the whole regulatory side covered, right?
Sure.
But
So
can you give us a quick summary on your business?
what we do, is this working? Is this on? Yeah.
Maybe you want to take it out of the beard? Yeah.
Yeah, the beard always gets in the way. What we do is that we link up companies with individual investors. So we're not focused on providing deal flow for venture capital funds, but we actually work with and invest alongside venture capital funds. But we give access to, today, 6,000 individual investors. Think of us as a big global angel network, except that we do the curation, both of the deals and of the investors. So you have to be, in our network, you have to be what's called an accredited investor, because we actually source investors from 70 different countries, and we have about 60% coming from the US. And to make sure that we don't go to jail, because crowdfunding is, in the classic sense, anybody throwing $50 or $100 into a deal.
Is that the smallest ticket? $50?
No, that will put you in jail. Okay. In other words, what you have to do is you have to take money only from what are called accredited investors. In this country, they're called sophisticated investors. In the US, the criteria are $1 million of net worth outside of your home. Here in the UK, it's £250,000. It's different criteria all over the world.
And what is the minimum ticket size?
$10,000.
$10,000.
Right. So in other words, if you see a deal on our site, and we inform you initially via email of the deal launch, and then we invite you to a webinar, and the deals have been very carefully selected. We put up about 2% of the deals that we see. So we have actually funded 52 companies in 18 months. We've invested $75 million in the companies, and we're the largest crowdfunding platform for equity in the world. We're much larger than our competitors in Silicon Valley or here in Europe.
And tell me, how many deals?
52.
52?
52 deals.
And you write their management presentations?
No, if I have to write their management presentations, they're not getting my money.
You said earlier you curate the...
Well, we curate the deal. In other words, just like a venture capitalist, we look at these companies and we decide which ones... They can't just list...
You give it a quality check before you take it on.
We actually give it a quality check, and the most important quality check is called My Wallet. So if we don't like the deal, we don't invest. If we like it, we invest first. Okay, in other words,
you invest
every
your
single,
money,
my money and my partner's money, we put in roughly about 5% of the total capital. And again, unlike most people's notions of crowdfunding, they think crowdfunding is a couple $100,000. We're doing now 2 million, 3 million, 4 million. We hope by the end of next year to be doing $8 and $10 million deals, and we invest with other venture and angels. So we've done a deal with David already.
Oh, really?
2 deals.
But you guys just met on Wednesday at our speakers dinner, no? You're
no,
fast.
we did it before NOAH, and maybe NOAH will make us do some more deals. But the reality is that we've co-invested with Excel and with Index. We've done 5 deals with Vinod.
But hold on, when you say co-invested, you bring the deal and they come in, or how does it work?
First of all, we lead about half of our deals. Okay, so I think on one of the deals we followed you, and on one of the deals you followed us. On BioCatch you followed us.
But what does your platform has to do with it then?
So the beauty here is that you don't have to be a fundamentalist about the web and not do things offline as well. So what we do is we curate the whole deal process. We act like an online venture capitalist. The only thing is that we don't have a fund. We have a huge crowd. We have endless capital. Because today there's $50 trillion in individual hands. And the problem is most people in this audience have not made angel investments. Wherever I go, people say, I'd love to get into the next WhatsApp or Facebook, but I don't know how to make that investment. I'm not connected to Ron Conway or to Peter Thiel. And so you're a schmuck, okay? Excuse me, you're outside of the loop. So we're getting people into deals with Excel and Index and Khosla and Peter Thiel and Eric Schmidt and Blumberg Capital, I said too. And
how much you charge for the funds raised?
So what we do, first of all, we don't charge the companies anything. That would be a negative feedback loop, right? In other words, if we're taking money from the companies, then we're going to get a second class of companies who can't go either to Dealroom or to venture capitalists directly. We want to take money from the investors alongside of a normal venture capital model. We take 2% management fees. We actually manage the investment. We aggregate all these investors into a single special purpose vehicle, so that when I write a check in a company, I'm writing one check just like a venture capital fund. The only difference is that my fund is for a single company. So, we'll participate in $20 million rounds. We'll take $3 or $4 million of it, except that we syndicate hundreds of people. We've already had our first IPO from one of our companies.
Which company was that?
This was Rewalk, which was one of the 3 top IPOs so far this year on NASDAQ. And we got in about a year ago. We also then invested 2 months before the IPO. We have about 200 investors worldwide who are delighted now. But it's not just they're happy.
What did you do before that you are like the leader of the crowd? You're the opinion leader. You find the right thing. Give us a reason why we should invest with you.
Well, I've been in this business for 34 years. I've been both a serial entrepreneur, had several exits of my own, which I've taken public, and I've sold companies. Companies got to values about $500 million. I managed my own venture fund called Israel Seed Partners for 11 years. We invested in 60 companies. We're the backers of Shopping.com, sold to eBay for $640 and a whole bunch of others. And I'm fairly well connected around the world, in Israel in particular, and in the Valley and elsewhere. I'll let David sell me.
and you have 50 slides which we didn't put on.
Yeah, we're not doing the slides today. What can I do?
Okay, now that's super interesting and helpful. So a bit different model. Yoram charges with Dealroom. The company raises. He helps a little bit more than you guys do. You are basically the power of the crowd. You aggregate demand and you co-invest.
And we make money on the upside. In other words, our business model is just like a normal venture capital business model, but the difference is that we hope in about 3 years from now to be investing $1 billion a year.
Through OurCrowd, you pimp up your check size.
Big time.
Okay, now David, what is going on here in the good old world of venture capitalists and Silicon Valley? I mean, I think your area got already shaken up quite a bit by this Y Combinator thing, which I try to understand, but I'm too old-fashioned for it.
Sure.
But this whole crowdfunding, is this good or bad for Blumberg Capital?
I think it's good. I think that the consumer and the entrepreneur are benefiting enormously from this, and the financial community, the venture capitalists, will do just fine. Thank you very much. We're going to do great. It's never been a better time in the history of the world to be an entrepreneur, and I would say it's never been a better time in the history of the world to be an early stage technology investor, because we stand on the shoulders of giants. The new platforms, whether it's easier to sell through SaaS model to the enterprise, mobile telephony and social networks to the consumer, and the CapEx reduction through cloud computing and so on, has made it so much easier. John and I have been breaking our backs for 20 or 30 years as investors and entrepreneurs. It's so much better now. Now, on the financial side, it's lagged, actually. Entrepreneurs in the tech world have been benefiting from this kind of explosion of automation and cloud, I should say, for about a decade. It's very recent in our world, and John's a pioneer in his model, and Yoram is a pioneer in his model. We can work with both of them. He's going to bring us deals that...
He's actually a supplier for you, right?
He's absolutely a supplier for us because he wants to sell wholesale. We are the wholesale buyer. He's aggregating retail, but can co-invest with us as a wholesaler. What do we offer that's different as a wholesaler? And I don't know, you might disagree, but I think the traditional venture capital firm we are, and we're Silicon Valley and Israel based, and we have about 300 million under management, about 70 companies in our portfolios. We add a lot of value that is hard for a distributed group of angels. I'm not saying they can't add value, sometimes they do, but we have a 24/7 team. We're on it all the time. We have somebody on the board. You take some board seats.
And we take 70% of it.
70%. We're 90% of the time we'd go on the board. And often there still is probably a difference in status. For a VC, they want a VC that's institutional to be on their board to help them. Now, over time, John is going to thrive, and he'll put more money out than we will, right?
I think a lot more.
A lot more. So he can scale enormously. I still think there's value added for both.
Yeah,
Right?
I think that it's not an either or at all. This is
both.
clearly synergistic. I would say that 80% of our deals we're co-investing with venture funds.
Oh, really?
We want to invest with venture funds.
I mean, who doesn't want to co-invest with David?
With David, for sure. But with the, I think that, look, there are some funds that you want to stay away from, but I think most funds
Which
are
ones?
Not going to say it. I got to live in this town, okay, and the other towns. But the bottom line is that I think our challenge, just to interject here, is can we harness the power of this crowd to build these companies? Because given how much things have changed and are social, the moment you have thousands of people essentially behind a company early, you can do all kinds of great stuff. And we're finding now that members of our crowd are making introductions that lead to $10 million checks.
Of course.
They're helping hire CTOs. They're getting them on TV. They're introducing...
Like a multi-level marketing approach to VC.
It's wild, okay? Because the idea is that, our Rolodexes are pretty... His is really impressive. Mine's somewhat impressive, okay?
Equal.
But the bottom line is that your Rolodex as a collective...
That's right.
Oh my gosh, okay? And no one has ever harnessed that on behalf of building a company. And that's what we're trying to do. We're trying to build the software and trying to build the framework so that you can not only just fund companies differently, but you can actually build them differently.
Okay.
I think if I may add, the people who are not represented here are the real disruptors, even more disruptive than anything here, and that's Kickstarter and Indiegogo and those kind of groups, which I'm sure most of you are familiar with. They're bringing the opportunity to funding to groups that really could never even get funded before, for opportunities, particularly in hardware that was hard for early stage VCs to invest in for decades. It's getting easier now. But that also has two things. One, it has, so far, free equity for the entrepreneur. Like there's no equity.
Better than free.
Free equity, woo! And it doesn't have as government strings attached. Often governments will give equity to companies, particularly in Europe, and it's sometimes problematic because of the strings attached. But these platforms have nothing. The other thing that they can give is a signal of market traction. And take Oculus Rift as the perfect example. Right?
Right, but except, take Oculus as a perfect example. Here's a guy, Mr. Lucky, literally his name, the CEO, who got $2.4 million from Kickstarter to build these really cool goggles. 2 years later, he sells the company for $2 billion to Facebook. Now, he got very lucky. His name was appropriate. But the guys who backed him on Kickstarter feel like idiots because all they got was a dumb T-shirt. They got nothing, okay?
Right.
And people who want to back and take risk say, okay, he'll get really lucky. Just give me a little luck. Or maybe he should have sent them, to Hawaii for a party or give him an invitation to a big dinner. But the bottom line is they got...
Give him a speaking slot at NOAH.
Absolutely.
I would like to ask my old colleague. You guys have good opinions, and it's very interesting to listen, but I'd like to ask Yoram a question. When we were both running NOAH, we always got these emails that we should help raise 5 million here, 2 million there, 10 million there, and our argument, the official answer was, no, you should raise it yourself, but the unofficial was the fee obviously was not attractive enough. But I genuinely believe that hot companies don't need boring bankers to raise capital. And I think Dealroom sounds interesting to me because, you give them a little bit banking expertise and the relationships, but you don't make them seem desperate. Can you give us some feedback on how entrepreneurs adopt to Dealroom?
Yeah, no, I agree 100% what you say. So this also is our pitch. We say, look, if you're a good company, you should not have problem raising capital on your own. In fact, if you cannot do it on your own, probably we'll not be able to. We're not able to open doors for you that are closed for you without us. But what we can do is give you just a lot more options, give you access to many more investors than you have on your own. So instead of hiring an advisor, which is probably overkill for these smaller transactions, and not having an advisor at all, you're probably also cutting yourself short. This is like exactly the middle way that gives you all the benefits.
We have to stop.
Can I just add one point? On that last point about the fact that Oculus Rift gave nothing back to the crowd, we're actually looking at an opportunity right now for a new model that's never been tried, which will solve that problem. And I'd like to talk to you about it
venture capital?
after stage. It will be a crowdsourced platform, funding platform, but it has the two sides covered. The Oculus Rift problem will not happen again under this model. And I'd love to talk to anyone in the audience interested, and since I'm not on the program, David@blumbergcapital.com.
Online, you are on already. Okay, guys, thank you so much.